so this is the topic today, okay? And what I'm trying to tell you guys today is actually this. Okay, I know it's controversial because I didn't want people with a specific type of mindset coming in here today. I wanted people to come in here and be like, oh, price action work. Well, Navin teaches price action, so let me just show up there. Half of you guys are here because you guys just like to see what I have to say. The other half is members, okay? And some of you are new and you're like, well, it matches my time, so I'm here. We're going to be talking about some stuff that I don't normally teach because I don't feel it's in the right place for me to say it. But I think it's time. It's time. It's time for me to raise your level of understanding of the markets a lot better now. Do you know where you fit into the market? Okay, what's our role? Okay, what's our role as traders? Where do we fit into the market? Everyone thinks, well, to trade Forex, we're in this industry to make a lot of money. Normal. It's a normal way of thinking. We're here to make money. We're gonna make so much money that we can't even count it. That's the perception of, that's what we're here to do. We're here to print money, okay? Now here's the thing. Here's the controversial part. Okay, let's start with the basics. What happens here? Okay, market goes up. It pulls back. It goes up again. What's the public doing? Are they buying or selling? Yeah, we're buying, right? Okay. In this process, market pulls back again. Support resistance. People are buying, right? Markets are up, we want to buy. And then we want to buy. Why? Because we're price action traders. What is a price action trader? Think about it. A price action trader looks at price and determines value. Okay, so he's looking at price and he's like, it's up. Now, here's the thing. Price action means you're no longer trading with indicators, correct? But did you ever sit to wonder that, did I become the indicator? Like, I removed the indicator, but am I the indicator now? Am I just chasing the market? Hey, you're going up, take me. Oh, you're going down? Okay, I'm coming too. You know, like, are you just following the market? Is that really what price action trading is to you? Okay, so just think about that, okay? Right? So in this process, everyone is still buying, and then the prices start to drop a little bit. They're still buying because they're like, yes, I got that discount price. Buy. More buying, because it's going up. And everyone's like, what? Some people buying. What? Seriously? Sell. It's not a buy. Sell everything. But then the big players are like, oh, thank you for the discount. I actually wanted that Ferrari at a lower price. Thank you very much. And as prices from that will battle, after the battle, prices rise. Okay. Everyone with me in this concept so far, that the average person who's price action trading is not really trading, he's just chasing the market. Correct? Now, where do you fit in as a trader? Why do the markets move? Let me ask you even a much more important question. When a big player gets involved in anything, is there a chance for him to lose? These guys know how to play the game, and they know how to play the game well, which means everything that they do with their money, I don't want to lose. So how a big person, okay, or a big player thinks is like this.
Now, are you curious about the exact strategy Navin has been using to approach the markets? The Mastering Price Action course reveals all of that. In that course, you're going to understand the logic behind each price action movement. And from that, you will be able to take your trading to the next level by having a much more solid understanding of the markets. And because you're a subscriber, just click on the link in the description below to access our exclusive discount. Time to take your trading to the next level. All right, let's get back to the video.
So here's Mr. Big Boy. Okay, now how is he thinking? Okay, do you think that's a good deal for a larger player? Just take a moment and think about it. Everyone will say yes. And why is that? Because it's good risk to reward. It makes sense. It makes educated sense to do this. Here's the thing about the larger players though. They don't care for this part. They don't care for that. That is not in their dictionary. What they're worried about is if they see that, if there is a loss, that means there's a possibility. They're like, I don't like that. I don't like that I am putting my neck out there to make a little bit extra money. No, I'm not going to use my neck to make some money. I'm going to use someone else's neck to make extra money. This is the difference between the average person, the way he thinks, and the larger player. Okay? Now you understand how the big player works. Now, are the big players trading? Here's the next question. So now think about it. We're going to use Euro USD as an example. Okay, Euro USD. Let's say the economy is strong. Okay, Euro is strong and it's just starting to rise. Okay, and if the Euro rises, the dollar is obviously going to be weak. Correct? For this chart. So what these guys do, they play the game that's not currency related, but outside the currency. They're like, okay, I'm going to go to Europe, anything that deals with Euro, I'm going to buy factories. Okay, I'm going to buy factories. I'm going to buy real estate. Anything that holds value, anything that holds value. Okay, markets start to rise. Okay, these are the American players, right? American players coming into the European market and start buying stuff. Big boys, right? Big boys, cash full of cash, pockets full of cash. I'll buy that, I'll buy that, I'll buy that. They're using currency as leverage. Okay, so they buy it. Markets start to rise. Okay, as it gets up to a higher point, okay, higher point. Now, when you buy a factory, how much risk do you have in a factory? Well, are you just going to buy a dying factory, a factory that never makes money? Are you going to buy that? You're not going to buy that, obviously. You have the money, well, you're going to do your research and you're going to buy a good factory, right? You're going to buy a winning factory. So they buy a factory, let's say that has $1 million of profit every year, okay? So they buy it at a very low price because of currency exchange. They buy factories making money and currency is also rising, which makes the valuation of the factory start to rise. The factory is now not worth $1 million, but in actuality, it's worth maybe $10 million, for example, as the prices keep rising. Same thing with the real estate. He got it at a low price, very low interest rate when the economy was bad. And as he starts rising it, interest rates, everything starts rising because more and more people are starting to get into the market. And as prices get up to here, and this big boy has information the average person does not have. Okay, that information the average person does not have. So once it reaches up to here, and he's like, I think at this point the US economy is going to start getting stronger compared to the euro. Which direction would that go? Okay, if the markets are going up, that means euro is strong and dollar is weak. And then suddenly if you see the US economy is going to start getting stronger, the charts are going to go this way. Okay, and then the game continues onto the US side. Now, but wait, what about all the stuff that they bought in the European currency? What do they do with that? So one big boy goes up to the next big boy and says, hey man, I got 2 factories, a house, an oil plant, a lot of land. I don't want it anymore. You want it? What do you think the other big boy says? He says, what do you think? I'm stupid? I don't want that shit. I know the economy is going to go down a little bit. Why do you want me to buy it? Okay, so what are we going to do? Let's create a market. Let's create a market. Because in this market, all the big players don't want to do any exchange with each other. But who will do this buy up here? Traders are dying to say, give it to me. I will buy it at this expensive price. So they need a lot of people to get into the trading. That's why foreign exchange is the #1 most liquid market in the world. So think about it. What is a trader's job? Where does he fit into this industry? He fits in as the goat that takes the risk at the worst price possible, because for them it's like, oh my God, I didn't expect people would just chase the market like that. We just hand over the debt to them. Yeah, it's your problem now. Thank you for the expensive price. I'm out of here. Strange, isn't it? But this very simple logic is misunderstood by 99.9999999% of the market. Now, the average trader, because they don't know this information, they're like, oh man, the market was made equally for me to step in and make some money and be like, ta-da, I don't need to work anymore. Wait, you know how dangerous this is? If you don't know. But if you do know, yes, it's lucrative. It is all about risk management. It is never about chasing the money. Okay? All right. Now, here's a $1 million question. Okay? If you've understood what I've told you so far, you are already ahead of at least 90% of the world. So you're looking at a chart, right? Now do you guys understand why I put so much emphasis on money spot? Because it is the only spot you can get in without being noticed. So what is this money spot, you say, Navin? Let's take a look, okay? So when we're looking at a bigger picture uptrend, okay? And then on a smaller time frame, it starts doing this. On a smaller time frame, everyone's like, wow, look at the speed it's coming down. Look at the speed it's coming down. It's a sell. It's a sell. But normally, okay, so let's say there's a buyer here. Okay, just think with me. Don't think in terms of charts. What do I do? Don't think like that. That's minute thinking. Try to understand the logic, because once you understand the logic, you will know what to do. So when you look at this stuff, right? You look at this stuff and you're like, markets are going down, they're going down, they're going down. Okay, in this process, before it did all that stuff, it was buyers here. It was buyers here. Here was buyers, here was buyer. Let's say this price right here, is $5. Just a crazy price, it's $5, okay? Okay. So the price is $5, and then the price suddenly rose to $5.50. Okay, they went up to $5.50, and you're like, oh man, I wanted to buy it at $5. I wanted to buy it at $5. Okay, come down to $5 and I will take it. Come on. Come down to $5 and I'll take it, because I can afford $5. I've done my research. $5 seems to be the good price for me to buy this item. Okay, don't treat currency like it's not an item. It's just like an item. It's like a property, it's a car. You're not gonna move until you get that price. Okay, here's what happens. Prices go up to $5.50. $5.50, then from $5.50, like, oh, come on, come down. $5.90. Oh my God, it's gone even higher. You know how much money I could have made? Imagine. You know how much money I could have made? Imagine. Prices rise up to $6. Everything in the house is breaking right now. You see the dog flying because you kicked them. You see, plates breaking. Your screen is half shattered. Everyone's just so angry. Oh God, I missed that profit. Okay. So up until this point, you're watching it, and then you see this sudden move down, and you're like, oh, good. It's coming down. It's coming down. I'm getting a price lower again. It's getting close to $5.75. You're like, good. $5.75. Okay, good. Then it goes up again a little bit, but then it comes down harder, like very hard. Whoa. What's going on? Why is it so aggressive? Okay, at this stage, you turn on the news. News is like markets are collapsing. That's the reason why you see sudden hard movements coming down. Markets are dying. Okay, everyone's in panic mode. Okay. And as price inches closer to $5, the original price that the guy wanted, the poor person And the poor individual actually says, I actually want to sell. It's not a buy anymore, it's a sell. He gets caught up into this movement, into his emotional rattling, because he was so emotionally involved on the upway that when it comes down so aggressively, he's like, it's a sell. Okay. So as it's coming down like that, okay, support equals resistance says sell, but support equals resistance here says buy. That's a money spot. The big players want to go long, the short-term players are selling it. Now, this same concept, why you always heard me say who wins? The smaller guy or the big boy? Who wins? Think about it. Okay, so big boys, right? Yeah, why do I always say big boys are going to win? Because look, in this process, when the big boy is on this momentum, he's rising. And this stuff, you know, if the market comes crashing down in one shot, that's different. But the fact that he's crashing down in multiple pieces, that makes the emotions rile up. Because the first time he wasn't interested in the sell. Second time he got more interested, he got scared. Third time even the news is saying, oh my god. Everyone's panicking, right? So if once everyone panics, everyone turns seller. And if whoever has a Ferrari up here is now saying, you know what, I'm going to take that Ferrari and I'm going to sell it for 50% discount because I think Ferrari is going bankrupt. I have no idea what's going to happen to Ferrari. And my decision to buy it at there was not good, so I'm just going to have to sell it. And this guy here is like, oh, 50% discount, do you say? Why, thank you. That's the price I wanted. Thank you, I will take that 50% discount. I don't like Ferraris, but I'll take it. It's a good price. And as the prices rise again, I will sell it off later to the next guy who wants to buy it so aggressively. I'll give it to that guy. And I just made a quick buck. I made a quick profit from someone who's greedy and fearful. And this guy is just patient, like, I don't understand this game. It's so lucrative. People just keep giving me money. Are you starting to get that logic? Now think about it this way. Can you control that risk? So what people do, okay, some people are saying, okay, if I'm going to do a buy, I will buy an option. Okay? What they're doing, they do countering. They say, I'm going to buy on the spot Forex market, but I'm going to get a put option which says that in case the market doesn't go up, it goes down, I only lose this much kind of thing. But if it does go up, then I make all that extra money, whatever it may be. Okay? So there are a lot of risk parameters that you can control yourself by. Okay? You can always control yourself by that. Thank you so much for coming. Until next time. Cheers. Bye for now.